What we saw last year was there was a great reopening play, and the consumer was really the focus in terms of some of the industries that we favored. But now the consumer is retrenching a bit, and so we want to shift a little bit more to traditionally defensive industries. So, for example, you might think about business services or software as a service. These are companies that make life easier for other companies or organizations. They can operate cheaper, better, more efficiently, and so those really never go out of style. But there's other industries like healthcare, which you would think would be defensive, but there's still a bit of a COVID overhang there because people aren't going for elective surgeries, and so that's been a bit of a trouble spot still.
So in a way, we're moving from one crisis to the other. We're just talking about the fact that the crises are getting shorter, in your view, but more often. So how do you prepare?
I think that's right, and you do need to adjust to every crisis. I mean, one of the other things from an industry perspective is geopolitical. You really started with mentioning that as well. Defense industries or defense-related companies are actually very interesting to us today. And not coincidentally, they're often tied to aerospace companies too, and certainly if you've tried flying recently, you know, the airlines have a way to go to actually get their services back up and running. So I think that's another industry where we're particularly interested.
Let's talk about the regional setup as well. You were saying that you did invest quite a bit in Europe last year, not this year. Why is that?
From a debt market perspective, the U.S. was particularly competitive last year, and so we saw relatively better value here in Europe, and we're particularly active in the Nordics and also in Germany as well. This year, with the geopolitical tensions in Ukraine, it's been a little harder to get excited about Europe, and there's a lot of concern about a recession potentially hitting here sooner, given the dependence on Russian gas and oil.
But talking about recession, it seems that the U.S. is actually not far away from it either, looking at what the consumer is doing. So what's your picture here?
I think you're right. I think there's a lot of questions around what central banks can do and certainly what the Fed can do in the U.S. They're trying to engineer a soft landing. I'm not sure they necessarily will. We do have the luxury as debt investors to be focused much more on downside protection than upside generation. And so if you just focus on will the company pay you back, it's a much lower threshold in terms of performance than it might be if you're an equity investor and looking for much more growth.
Why do you say that the Fed doesn't really look like engineering a soft landing? So what's your view?
I think the jury's still out there. I think you see how the markets reacted to the rumors that the next rate hike might be 75 basis points instead of 50 basis points. So there's still a little turmoil, and I think the jury's still out.
Talking about Asia, because that always had been a place with higher growth rates. So what's your view on Asia?
Well, Asia, there's obviously a lot of different countries there, and certainly there's a bifurcation between the developed countries where rates have been low for a long time and it's hard for our cost of capital to necessarily compete. And then you've got some more of the developing countries where it is a little bit more interesting. Historically, it's been more of a special situations market, and we've been particularly active there. But with some of the noise around China right now, and China also being shut down, it's a little bit tougher to get excited about that country in particular right now.
Do you think we are seeing a tectonic shift when it comes to China? Because China always had been the growth engine, at least for many years. So it seems that this has changed.
Well, China's certainly always been a very centrally controlled environment, so it's a little bit hard to look behind the curtain to see what they may be thinking there. And the government's obviously been in place there. It's been the same administration for a long time. I think he's now got a lifetime appointment, basically. So it's really hard to tell what China is going to do next.
One last word on tech, because clearly you must have been discussing that tech sell-off here on the ground as well. So what's the dominant view? Is it already time to go back?
Well, what's interesting with tech is there's a lot of things where, again, a business process or software as a service, there's a lot of long-term value in companies that provide that sort of a product. You've certainly seen that tech sell-off, the public market's down 25% or more there. I think it's a little bit of throwing the baby out with the bathwater. You certainly are still seeing the private markets actually hold up in the tech space. Valuations are still somewhat surprisingly pretty similar today to what they were at year-end 2021 as well.